Okay, here's the boring bit. Anything you hear or see in this video is not investment advice. It could be absolute rubbish. Please do your own research. Hi there, in this video I'll be covering news on 4 companies I own, and also, in fact, I'll be telling you why I sold one of the companies that I held for a while. I'll also be looking at news on Bitcoin and look at the charts of Bitcoin, gold and other companies I own too. And do me a favour, let me know right now below in the comments, okay, which company do you hold? If you hold a company, or if you hold Bitcoin or something, which company or commodity or anything are you most bullish on between now and the end of the year? What do you think is going to have the biggest rise? Let me know in the comments below, please. If you like this video, give it a thumbs up. And, of course, don't forget, if you want the next one to your inbox, then just hit the subscribe button and the notification bell. Don't forget the bell. Oh, it's very important. Okay, let's get into the news. First company bit of news is Itaconix. They did a trading update. It fell around about 20% of the day. Bought back up by the end of the day, though. Look, and it came back up to, 1.6. Look at the volume there. Almost 10 times, pretty much. 9 times the volume. So let's go into the trading update, okay? There's a bit of a profit warning here. This is what they said. Trading update, this is for the year ending 31st December 2019. Revenue for the first 3 quarters of 2019 ended, reached 0.7. That's up to September, by the way. So £700,000, representing a 78% increase over revenues for the first 3 quarters of 2018 and matching full year 2018 revenues of 700,000. Growth demonstrates the value of the company's products in detergents, personal care, odour, all that stuff. The board expects second half revenues will exceed the first half revenue. So let's have a look at first half revenues. So here they are. That's 480,000. So they're going to exceed that. All right. So you can say they're going to hit what, $1 million in revenue for the year, maybe. However, oh, here we go. Here's the however. As a result of delays in certain customers' projects, the board believes that full-year revenues will be below market expectations because there was expectations. Let me just look at the expectations here because this is so they're expecting here 1.5 for the year. This is some broken notes sort of thing. So they're going to say that it's going to be below that now. So we know it's probably going to be close to $1 million, but below that 1.5. The board believes full year revenues will be below market expectations, but it still represents a very significant increase over 2018 revenues. The board expects EBITDA loss to be second year half be broadly in line with the 1 million loss for the first half of the year. So let's look at the first half of the year. Loss was 1.6. What are they talking about? Let's scroll down a sec. So net cash outflows is that okay? 1 million. EBITDA, they said, did they? Okay. Where's it by? EBITDA. All right. Group operating loss there. 1 point there. Maybe that's it. So they're going to lose a million, 2 million this year, which was down from 2.55 last year. That was 2.5 for the 6 months last year. So they are reducing costs. But, you know, let me just say the board believes that end of year cash will be in line with expectations due to significant improvements in working capital. So again, expectations are here. So net cash at the end of the year is 0.7, maybe a bit less than that, maybe around about there. So what do I think about this right now? So let's go back, right? So at the moment, they are 4.3 million market cap. They're going to be doing a million revenue this year, okay, pretty much, you know, just over that. I think they're overvalued. I like the company. I still hold stock in the. I'm not buying any more now, considering this knock-on effect. There's always delays. Always be ultra conservative when valuing companies. So listen, I'm not going to buy any more of this company until they're doing. What's the expectations for next year? Let's knock those now. Let's say 3.5. Let's say knock 500,000 off that. So 3 million next year. If it comes down to a market cap now of 3 million, I see decent value, really, you know, on this. But where are we now? 4.5. Are we 4.5? 4.3? I think maybe sub 4 million is quite good. I think, but I at the moment, I don't think it's a bargain. We're talking 4 times current this year revenue. That's what 4.3 times this year's revenue. That's high revenue. It's not even making it a profit. Let's have a look where we are profit wise. So we're going to be making net cash next year, a loss next year. So 2021 is when we intend to make a profit. You know, I'm not overly. I don't think. Listen, at the moment where we are, is it a bargain? I don't feel it is. If there's a big sell-off, I think it needed to come down further. It was down 20% 5% yesterday at one point. And I thought, okay, that's closer to it. I didn't dip in. I'll let it play out. Well, the thing is, the question you need to ask now is, they said they have cash at year end of that. We'll see. I'm going to wait and see. Patience is the name of the game, you know. Let's see what happens, because that cash may go down. They may need to raise now. Who knows? Always look on the negative side. It's not by being, if you own stock, right? There's no by being ultra bullish and then being disappointed. You're better off being pessimistic and very conservative, okay? And that way you won't be disappointed. The amount of times you only ever lose money when you're overly optimistic on stocks. Really, when you're blind faith in the company, always expect the best. You will lose money and be disappointed. When you underestimate, be pessimistic. You know, plan for the best, hope for the worst. That kind of saying. It'll be fine. So okay. So next one I want to look at is Polarean, because Polarean was on the podcast. Richard Houlihan, the CEO, was on the podcast this week, and he said 2 more patients left to enroll. Okay, now we know this is basically the timeline. Expect POLX news to be this. So TR1 confirmed amper out. We've had that. Enrollment completion. We've nearly had that. 2 more patients left to enroll. Results of phase 3, it'll be before the end of the year. And like I said, I'm quite bullish on the phase 3. It's not a normal phase 3. And I say here, there's many reasons Polarian's phase 3 clinical trials are low risk. One being that they've previously conducted a pilot. They've done a pilot. They've done this before with the FDA, in accordance with the FDA. And this is what they say. The successful conclusion of the pilot provides us with confidence. The chosen methodology with the FDA should maximize the probability that both the primary and secondary endpoints of our trial clearly demonstrate non-inferiority. So that's all they have to demonstrate, is non-inferiority to a 40-year-old technology, which is harmful. It's radioactive. It's 2-dimensional imaging. There's a 3-dimensional and non-harmful. To me, it's a no-brainer. You've got the NED buying 200K's worth of shares recently when AMP sold, the Amphibian sold. This is, of course, on top of Richard, who bought 90 grams of shares earlier in the year. And this is the kind of revenue you're looking at. Based on 100 machines, these are just top-tier institutions in America, all right? The Far East dwarfs America's potential, and you've got Europe, which is similar to America's potential. This is just 100 machines in America. Remember, you get profit from the machines and the gas, the servicing, and the software. So if they sold 100 machines, the profit on that would be 28 million. That's what's one-off, and that's over a certain period of time. So these are recurring in the green here. Recurring is this. So on gas is 6.6 million there. On service contracts, 2 million. On software updates, 4.5 million. So recurring profits, okay, $12.7 million a year. A P of 10 would put this the valuation of Polarean on 127 million. That's a 5-bagger already, okay? And that's just in that conservative. They've already sold 25 machines, so 75 more machines with FDA clearance would get them that kind of revenue. And like I say, they have potential elsewhere in Asia, in Europe as well. So I find 5-bagger in the next couple of years quite nice, and that's on a P of 10. That's very conservative. This is a groundbreaking bit of kit they've got, technology here. So you can guarantee it will not be on a PE10. You could double that. Okay. I had, of course, Morris on the podcast, who's Chief Commercial Officer of Open Orphan. And just a reminder, this is what Open Orphan do. They've got 3 legs to their business, all right? They've got Venn Life Sciences. This itself is going to be a profitable business, turning over in excess of 10 million euros. They're only valued at, by the way, Polarean is valued at, what, 25 million, I think? I think 25 million. Let's go back to what Polarean valued at. 27 million. So that's a 5-bagger. But let's go back to... So they've got Venn, this business here. It's a services, pharma services company. It'll be profitable, it'll be growing, and it'll grow by acquisition paper. They won't issue cash or raise funds via cash. They'll issue paper, and it'll be a cost plus, a value plus deal that Carl is hoping to do. So they'll buy the company, another company, bolt on a company here that'll be synergistic with Venn also, plus it'll be sort of valued at 200 or 300% revenue then, hopefully. At the moment, it's not. It's valued less than that. They've also got this virtual rep, right, which is a nice data platform, which has a lot of upside. What I'm really excited about is the genomic health database. This, to me, is blue sky potential. Okay, so how does it work? Just scroll down here. This is what happens. So Basically, they will have the data of rare disease patients, okay, gifted to them by rare disease patients, of course. It's under GDPR rules. They own that data. They'll share it with Venn. Venn will share it with pharma groups. Big pharma groups will pay for access to this data, okay? And what I didn't realize is this. They're hoping to get around about 10,000 patients' data on this platform. Now, they're saying this is rare diseases, the cost per patient, per data set to pharma companies, they charge them about $5,000. I think it's $5,000, okay. I don't know that, $5,000 per patient. Times 10,000, sorry, that is $50 million per 10,000 data set. Now, it's not exclusive, so they can charge several pharma companies, but even if they have one, okay, one pharma company buying this data, that's 50 million. That is what? 3 times the value of this company already. That's not including the other parts of the business. Now, let's say they have 2. That's 50 million, okay? Or 350 million, okay? And what about one of these pharma companies just buys it off them? They've got to work that out. But also, not that. If one of these pharma companies creates and develops a drug off the back of this data, they also get milestone payment and royalty payments on the sales of that drug. So massive upside here. I really like this a lot. This is Open Orphan, of course. And as far as milestones coming up, I think they'll be releasing more news on pharma companies they're talking to this year. Maybe they'll have an acquisition as well before the year end. At the moment, they've got cash. The team behind this company done it all before. Very good team. So I think Open Orphan, put on your watch list. Okay, listen, I've sold Argo Blockchain Mining, and somebody asked me if I'd sold them on my YouTube channel in the previous video, and I said yes, and I wrote sort of quite a comprehensive reason why, and so I've copied and pasted that and just adjusted a bit. This is basically why I've sold them. Okay, after doing some research recently, I decided to sell ARB and buy Bitcoin instead. Why? The difference between investing in ARB and actual Bitcoin is a bit like investing in the shares of a company that mines gold and actually holding the gold yourself. There's added layers of complexity in owning the shares of a company, i.e. margins, how the business is run, other factors that have little to do with the underlying asset. The difference between gold and Bitcoin, though, is that gold is hard to transport and hard to store, unlike Bitcoin. So I prefer to hold the asset rather than the company's assets. Also, Bitcoin miners face a few issues if the price of Bitcoin rises or falls. So if Bitcoin price rises, it attracts more miners, but the algorithm prevents more than one blockchain being created every 10 minutes. So to prevent oversupply, it does this by making it more difficult to solve the cryptography equations the miners need to solve to be rewarded with Bitcoin. So this doesn't mean, because the price goes up, doesn't automatically mean the miners are getting more Bitcoin and they're doing better. It makes it harder to mine. So there's also a halving event next year, and this will see the reward the miners get reduced from 12.5 to 6.25. Okay, I've got that wrong there, 55. It's thought that the Bitcoin price will rise, and there's a good chance it will rise. But it's not guaranteed, and it's not known what effect this will have on the miners. If the Bitcoin price falls, then the margins the miners earned are squeezed, and also you've got the doubling effect of being hit by the share price fall, the sentiment. So they're doubly hit by that. So in summary, I want to accumulate Bitcoin, as I see it's a hardening asset that has a potential to be an appreciating store of value, which I hope will be on par with gold in the future. All right. Talking about Bitcoin, some big news happening here. Look at this. On Friday, Bitcoin block 600,000 was mined, and there are now 18 million Bitcoins in circulation. It will take 2.5 years to reach 20,000, and it'll take another 100 years to reach 21 million. Basically, what happens is the supply goes down, and this is block reward in the blue, okay, goes down every 4 years, gets slower, so the supply gets slowed like a tap, gets turned off, supply slows up, and yet pretty much 85% has been mined already, so you've got supply going down and demand going up. All right, this is the way it's going to be. I really believe that. So this is the countdown clock to the next halving event. It's May next year. This is a massive milestone. Massive. Look at that. Or is it 85% of Bitcoins in circulation? And I think this will be bigger than the last 2 halvings. And I'll tell you why, okay? So first of all, let's look at the share price of this, of what happens on these halving events. Get my head out of the way. On these halving events. So look at that. These are the halving events that have happened. And these are what's happened afterwards. This is the price of Bitcoin from here. $1. Look at that. After that, so it was at 14. It went up there. In fact, you know what? I've got another tweet here that's probably better. It demonstrates it. What happens in the 6 months before. This is plan B. Worth following this guy. So look at this. Here are the 6 months before. We're not yet quite there. So next month, in November, of course, it'll be 6 months. Okay, so we are about 6 months before May 2020, Bitcoin halving. In 22 hours, Bitcoin jumped from $5 to $12. This is just the previous 6 months. It rallied afterwards massively as well. So 6 months halving in 2016, Bitcoin went from 350 to 650. This is within the 6 months leading up to it. All right, leading up to it. Now, if we go back to what happened afterwards as well, look at this. So it rose in these 6 months here. Okay. It rose in these 6 months here. It'll probably rise in these 6 months here. But look what happened afterwards. Whoosh. Whoosh. Sound effects are free. And I think that'll happen again. And there's predictions, 100,000 Bitcoin, 100,000 per Bitcoin. That will happen again. And do you know why I think it'll happen again? In fact, let's see what the last one is here. I don't know what this is. Yeah, that's the last one. And that will happen again. Do you know why it'll happen again? Like my video. You can see my video at the end here. But when these halvings happened previously, institutions weren't involved. Institutions are the big money, the proper money. Up until now, this has been pretty much retail. You know, chunk change. It's not been big money. Institutions we're talking millions, okay? Big money. Now, when you have a decreasing supply in an asset that is pretty much one of the best performers ever, institutions want access and exposure to that kind of asset, okay? They got the liquidity with Bitcoin. Like I said, it's the biggest cryptocurrency. 66% of all trades in crypto are Bitcoin, okay? It's bigger than the other 9 cryptocurrencies combined, and it's also on the futures exchanges. So institutions can get access to it, unlike other cryptos. It's also got a finite hard cap supply, and that supply trickle is going down. When you combine, okay, supply decreasing, increased demand, the share price goes up. That increases demand, the supply decreases, because of course more people are holding, and also the supply is finite anyway, the share price goes up. I genuinely think this next halving will see the Bitcoin share price go parabolic. I think it's going to be a massive re-rating. And do you know what happens then? You know what happens? People are not interested when the share price goes down. At the moment, the share price is like looking a bit bearish. People are not interested. They're genuinely not interested. People get excited, okay, when a share price goes up or commodity price goes up. You watch. I'm talking about this right now when the share price is going down. Not many people are interested. When I say that, millions are interested. If you look at the Bitcoin community, everyone's interested. But when the share price starts rising, you watch the noise pick up. That noise will attract more noise, more demand. It'll go bonkers. The time to accumulate is right now. Let's look at the chart here on Bitcoin, right? Here we are. Time to accumulate was down here, the RSI. And I'm not talking about going nuts and remortgaging your house. Be sensible. A little bit of exposure. Look at my video on risk. You know, things I've learned. 10 lessons I've learned from investing in small cap stocks. You've got to, get your exposure right. Otherwise, you can do really badly in investing. You lose money and you start panicking and you buy and sell and make decisions based on emotions. And that's not a good thing. So it could weaken. It could come down here. But we know this milestone's approaching. I don't know how long this weakness will happen for, but I can't see it long. I can't see the selling going on for long. I can see the accumulating, overtaking the selling, and I can see this re-rating. So at the moment, like I said, look at this. We've been... When the last time it hit 20 on the RSI and crossed back up to 30, back up to 40? Was the last time it did this? Was here, okay? And of course, it took a while, but all of a sudden, look at that, the big volume started coming in right here, and it jumped from, 3,600 to... When it moves, when Bitcoin moves, man, it moves. And when it does start moving, it will really move. and it'll attract other people. And like I said, because there's lack of supply, it'll go bananas. So the time to buy is on down days, like with small cap stocks. When you trust it, you believe in it, and you know it's going in one direction. When everyone's looking the other way, that's when you should be tucking it away. Hey, that's a nice little saying. When everyone's looking away, you should be tucking it away. Okay? Keep it sensible, though. Don't go nuts. Where's it going to go? People say 100,000. People say that. I genuinely think this. Look at the volume here pick up. Look at the volume now. When they started moving, look at the volume going nuts. People are buying here. People are going, too late, mate. Too late. The time to start buying is around here now when we're sold off. Look at that. We've been oversold recently on the RSI. It hasn't been down here for years. So, when sentiment is low and everyone's, writing it off, like I said, time to be greedy is when others are fearful. Be greedy within your exposure limits, yeah? Don't overexpose. But I genuinely think it's going to go bonkers. Bonkers. Let's look at some other companies. Let's look at Polarean, actually. So I talked about Polarean first. Let's look at that. So this is what I see of Polarean here. Look. We had some support resistance here. This is where I see it happening now. Support resistance. I see it going here. And hopefully, with the sellers out, big seller buy come in, seller out, hopefully now it'll consolidate around this level and pick up higher when news comes out. That's what I'm hoping for. Let's look at Open Orphan. Another one I genuinely have good hopes for. Again, we've got a bit of resistance here. It dipped down and down. But I'd say this level here, probably some support around at the 6.5, 6 pence level. We've rallied a little bit. The RSI is strong. This is good. The MACDs have crossed the zeros. This is good. So hopefully we've seen a low. We're going to sort of trade in a range now around about this area. And then news will come out and push it higher. What else? In fact, someone said to me, Nuformix. Hasn't been any news for a while. I did contact Dan recently. Dan said, what's going on? People are looking for news on this, looking for the Chinese payment and all that stuff. He says, listen, it's all going okay. Hopefully come on the podcast soon to chat about it. I don't know how long soon will be, but he seemed fine with it. So it'd be nice now if we could stay above this 8 pence level. We've seen the support here at 6 level. So it may bump along here, like I said, from 6 to 8 until we get some news out. But this is another one that really moves on. It's tightly held. It really moves on some good news. So hopefully it will move here. Let's look at Bidstack. Always worth looking at. Again, we are on that critical sort of support resistance level. If we get news out, it'll move above. If it doesn't, it may drift. It won't be a bad thing to drift down to this 200-day moving average. It's not a bad thing. It's good support there. But say, again, short-term volatility. That's all happening here. Long-term, we know this company has lots of potential, and the guys behind this company are the best in their areas, Faith in the team. They all skin the game as well. I just want to look at Tide, Crimson Tide. And news is coming out on this, hopefully soon. We've said IoT news. But yeah, you had that pump up here. I shouldn't say the word pump. Someone accused me of pumping. But listen, I do not pump shares. I talk about shares and share the news on shares and the information. That's promotion, pretty much. I don't dump, though. Don't pump and dump, Now, with Argo Blockchain, I've talked about that a lot. But I got, Argo Blockchain, I did it because I wanted exposure to Bitcoin. Now I've got exposure to Bitcoin without having an extra layer of complexity. So that's why I did it, okay? So I'm still, thing is, if you can get Argo Blockchain in your ISA. So if you want exposure to Bitcoin, you can do it via, Argo. That's fine. Not a problem. What else is there? Let's look here. I was looking at gold, actually. This gold is coming back a bit. These are all my alerts set up. And I've done a chart on this before. You can look at charts because gold, again, I think opportunity. We're having, slowing down. The economy is slowing down. Gold is a good play. 1, 2, head and shoulders pretty much. I think this will rise slowly here. It'll consolidate and it'll trade around this area. I think it's going higher. I think it's probably going to 2,000. Next, really rally up. Interest rates coming down. QE is happening. Same with Bitcoin. QE is happening. Quantitative easing is happening. They're printing more fiat money. Bitcoin, meanwhile, its inflation is going down. It's not going up. What What else is there? Look at some other companies here. Playing Nuformix. Immotion. Good chart, Immotion. Look at this. I really like this chart. Let me just get rid of this. So, that. So maybe some resistance here with a counter, because we had some here before. There's support there, previous resistance. Again, bit of resistance there, bit of support there. So we may have some resistance here, and it may come back. But I believe this now is a support level. Let's zoom in a bit so we can see this has been, pretty much resistance before and support here. So this band here may trade in this band for a while, but again on news it'll go higher. Anything else? Safe stays annoying. Safe stays annoying. Way education bids. Safe stays annoying. Way education bids. SSTY. So annoying. But I believe this, again, accumulation phase. They'll have more news out. But I do believe I'd be very surprised if it goes below this. It's like below net asset value anyway. They're profitable. They're generating cash. They have cash. They're expanding. Great team behind them, and yet they're at below net asset value. Ridiculous. Way Education, again, another company. Let's look at Way. So Way, right, is 13.6 million market cap. That's all it is. Okay. It's got 5 million quid in cash, so it's valued, excluding cash, about 8 million. Okay. It's growing at double digits. Last year was 72%. This year I think it was 44%. Online education is growing. Now I believe this is support here, this level here. This is a bit of resistance, but generally again consolidation news. It will climb higher. Just patience. These are improving businesses. These are businesses you need to hold if we're heading towards a recession. And listen, the figures out recently have shown that we are heading towards recession. China's GDP is slowing down. America's consumer side is slowing down. That's the main pillar of their economic growth. They look like they're immune to the slowdown. Now they're not. Cracks are starting to show in the biggest economy in the world, the second biggest economy in the world. Germany, they've revised growth down from 1.5% to 1%. They're nearing recession. We're close to recession. So we are going to be slowing down. Be careful in the stocks you buy. Do they have to go back to the market to raise cash? If they do, they may be in trouble. Or you may see a derate in the share price, because it's hard to get fundraisers away. If they're having to do fundraisers, it'll be at discounts. And they'll generally raise less than they need. So it's not ideal. Pick companies. That's why a year ago in September a year ago, I went from oil and gas to resource stocks down to cash generative stocks, or stocks that are going to be on the way to profitability. One last company, I did look at this on Wednesday, but Skin, Integumen. Again, it's nice bit of support level here. That 200-day moving average will provide support. And congratulations to the guys. RhinoCloud won some kind of tech award. I didn't quite see what it was. In fact, let me just look at what it is. Let me just look at G.J. Brandon. Let's have a look. So there we are. There we are. Great night. Tech leader, RhinoCloud team. Thanks to everyone involved. Tech leaders. They won some kind of award there. RhinoCloud, sponsor, RhinoCloud. That's their data. A3 AI data platform. So it's well done the guys there at RhinoCloud. Hope you enjoyed that in some way. Hope it presented some value to you. If it did present some value and you want the next one straight to your inbox, by all means, hit that subscribe button and the notification bell. Don't forget, today's question was, what company or commodity are you most bullish on before the end of the year? Is there a big milestone coming up? Let me know below. Don't forget, hit that thumbs up button. And right now, if you look at my face, you click on that, hit the subscribe button, notification bell, you get the next one to your inbox. And there's some more videos for you to watch right there. Thank you.